3, 2, 1. Hello, this is Dave, and welcome to Equity Story. I'm here with the amazing Mr. Wolfie, and this is just general share advice and not personal advice. Wolf, a little bit of action today. A few things getting absolutely hammered, shellacked, destroyed. I mean, nuclear bombed. Let's talk about the first one. LVT down 50%.
Not as if you can, can you kick a thing that's already down like that? Yes, you can. There you go. I mean, you think to yourself, it can't go any lower. It can. All you need to do is to say, guys, we want to delist. And unfortunately, the reasons, as a company wants to delist, they'll give the reasons why they want to list, more liquidity. They want to have, of course, the biggest one is the valuation is not valued. There's a reason for that, guys. If you don't perform on ASX, you're going to get devalued.
But I don't understand. But Wolf, if they delist, they're not going to be able to raise money. They're not going to be able to. Why would you delist? I don't understand.
Dave, I think the reasons why they give is that, first of all, is the valuation. They think being a private company, the value that's maybe gets I suppose given to unlisted companies is better than being listed. I don't know why they think that, but that's the train of thought here. The other thing is they think that if they're going to be delisted, they're going to have more opportunity to actually get more private equity funding than being on the list. Because what they're saying here is that because they are so low price, any funding that they do, it's going to dilute the hell out of the shareholders. So fair enough, but I tell you what, I think it's
why don't you actually become a profitable company? Right, and then your share price will go up, and that will solve the problem. Become profitable.
I think that the thing is they're probably listed too early anyway, right? In the first place, they started all of these companies list way too early. That's my biggest problem with a lot of these tech stocks. The second one is because they want to grow, because they burn a lot of cash. I think it's better being private anyway, right? Where they can just basically do whatever they want. And without the scrutiny of being public and, people looking at the books and so on. And you can't get away with anything really. Right? Being private, you can probably do whatever you want on your books. To a certain extent, of course. So I think that's a big part as well. So for me, obviously not great for the shareholders because they either have to get out now at a 50% discount or they're going to be stuck in this story for some time. And I remember the old Updater, which delisted as well because they were pretty much similar type, saying we're not being valued properly. We want to maybe list under the track in the US. You know what? Those people are still in that company Updater for 3 years without actually being able to access the money. So there you go.
You know what? It's very it's bizarre, but it just shows you the danger of picking bottoms and buying stocks. And another one, APX. Down 27%. The share price is collapsing. And again, Wolf, a classic example. Look at that. As soon as it went below the water level at $30, why would you have ever bought this? And how many times have people been saying, Dave, I want to buy it, and it's just gone bang, 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 lower. And
and from my point of view, from your point of view, absolutely, technicals, and from my point of view, fundamentals said, whenever there's a downgrade cycle, you stay away as long as you can. They never changed anything to say that they're back again, baby. So it's always been stay away. And I know people going, but it's profitable. Well, not anymore. They've just come up. They're going to be loss making. So there you go. This is just a great example of what not to do. Do not get into a stock that's on a downtrend. On fundamentals are changing, and it's on a downgrade cycle because it can go more lower than you ever can think of. It could probably even get the $2, Dave, over the next 12 to 24 months.
So this was all their losses were largely due to product development.
There's a lot of things in there that they've said. I think the biggest one is the slowdown with the expenditures by the big clients of theirs, advertising clients. Look, the problem is because it's not a forward-looking type company, right? So they don't have that visibility, invisibility, and that's the issue with this. It's more like a contractor. It's difficult, and there you go. When you get into that trap of a downturn and your clients maybe are coy and slowing things down, you're going to see a price share like that and possibly even go lower.
And again, CCP,
Mhm.
look, couldn't get through trend, hits the trend line, bang, down it goes. Not enough for the market, Wolf.
Dave, this is a double-edged problem here for them. I had to read through it. One of its staff, lack of staff. Remember, these guys need a lot of stuff because they are chasing debt, right? So there's people on the phones talking to people that owe money, and if they can't get the staff, there's a big problem. So I definitely would be getting out of this as soon as I can, because I got a feeling that this is going to get worse.
And really, it's I suppose it's such a horrible job to have to do. You have to pay a lot of people a lot of money to be abused on the phone 24/7, and
pretty much. And with interest rates rising, there's going to be much more defaults happening, right? So, like I said, it's a double problem here for me. I'm certainly not, I'd be getting out fundamentally.
And A2 Milk.
What an interesting article today in the AFR, right? Talking about the biggest daigo there is, the whale of the daigos, who was the biggest supporter of A2M when they first started, right? He was looking at Bellamy's back in the day when Bellamy's was using the daigos. He wanted to find an alternative. He found A2M, and he became a huge partner for them. He was one of the reasons why A2M was going so well in the early days. Was him. Now we've got the name to him. So he's, I think, laying into that basically A2M, saying that they are really forgetting about the daigos, and the daigos are very important. Even I thought the daigos have to be somehow, maybe put to the side, because it's not a channel that you think it's sustainable. But from what I read and his explanations of everything, and look, he made perfect sense. So I'm thinking, okay, maybe China is a little bit different. Maybe they do have the daigos have an important role to play to introduce the Chinese consumers to overseas products, and the best way to do it is through the small channels like the daigos.
Well, it's like a mafia, isn't it? A mafia of controlling the market. I mean, it's incredible, and the daigos are extremely powerful.
Yeah, absolutely, and you can see why. And now,
hang on, Wolf, we need to get in with the daigos, don't we?
Yeah, we do.
Well, we do.
Can we sign up a couple of up?
Have you got his number?
I'll get it off AFR.
Thank you. We like you.
Come and sell our company.
Yeah. I don't know. Yeah, Equity Story China. That'll be fun. Anyway, Wolf. So let's have a look at something a little bit more cheerful, because
so that's depressing, wasn't it?
Yeah, 4 announced was absolutely terrible. So some good news. ELO. Not bad at all, right? Okay, it's in a downturn. Why would you buy that? Well, only if you're an aggressive trader, and you might look to buy it off a daily chart, which is high risk, not the way we want to go. So, the announcement was good. You've got a stop loss on this at, say, 264. You could buy it. You could buy it at 282. Target's 350, 360. Tell me why you like this announcement.
All right, so it's more a transcript of what they've come up, about a week ago, about where they are at with a quarterly. So I'm just going to quickly go through and summarize it for you at the end, because I'm looking for that guidance for FY23. This is what the important thing. We've got FY20 out of the way, FY23. So what they're saying is AAR is expected to grow organically, key here, organically, by 24-29%. That is a good number, right? 24-29%. So if they can hit that, that's nice, over the next 12 months, to between 134 to 140 million. So that's nice, right? That's a decent number. So the revenue growth out of that AAR, because that's just the annual recurring revenue. So that will translate to a growth between 25 and 31% revenue, which is between 140 and 120 million. I'll take that. That's a nice number. Then we're talking about, as a result of this growth and a stabilizing of the cost base, we expect EBITDA to continue to accelerate as we leverage this cost base, and expect this to fall in the range between 20 to 25 million positive, right? So as you can see, the leverage here is starting to come through to the fore. Now, can they execute on that? This is now the key here. If they can, I think if they can execute on this, and they're talking about, we're talking about that we expect to be break even across the year. and provide a guidance between negative -2 million to positive 2 million, right? So that's nice. But the key, if they can execute here, I think they can definitely hit that $3.50 price target for us.
All right, and what you've got here, Wolf, you've got this sort of big jump, and you know what? It's holding it, and it's working its way up. A good announcement today. I like it, and I think you've got to use a stop loss on it because
100%.
right, we know it is lightly traded, but we're going to go 264, see if we get 350, and it's listen, it's not trading beautifully off a weekly chart. I could argue slim pickings, but it's picking something.
Yeah, exactly. Look, at least you've got a company on the up, I think, financially, right? And that's the key for me. If they can, like I said, if they can execute and hit what they've said they're going to hit, surely you'd think it's going to go higher.
All right. The next one I'm interested in talking about is DVP, Bill Bowman.
Yep.
Right. This is a guy that took Northern Star from what, 10 cents to
10 cents. Yep.
To $10. He's one of the top guys in the industry.
100%.
Now, Wolf, you said all along you got to buy the man on this story.
Yep.
And you said it all along when it was down here at 20, 30 cents. When as high as $4, and it's come back down here. It's at $2.32. Some good news today for the long-term investor. Are you looking to nibble away at this at $2 around this sort of level for if you took the long-term view off a monthly chart, which is something that listen, we don't normally do on these sort of types of companies, but is it, do you make an exception for this guy, this Bill Bowman?
You have to, Dave. The thing is, look, what he's done at NST, he gives a bit of a blueprint, right? He's a wheeler and dealer, and he's not going to be happy to have a market cap of around 400 million. He wants to turn this into probably the next little mini BHP, possibly, right? Of some kind, or a little maybe Fortescue, or he's thinking big here. So you've got to give him time, space, and the price will probably fluctuate here. And he's already done the dealing. He's come up with a company that will support the industry, and he's got a already contract with Bellevue Gold, right, which is going to give him the cash flows possibly to invest back into the business and maybe pick up some of these crazy deals. And it looks like today, he bought that Woodline project out of New South Wales for 30 million. Already today, I'm thinking this is probably worth 10 times as much, right, just on the figures coming up today and what can possibly he can do with it. So I'm looking, look, this is probably the start of it. You got to, like I said, probably 5-year period. You got to take a 5-year period with this. I'm liking the fact it's come back to the $2.30 because it gives you a nice entry point, I think, if you take the long-term view here. But you got to be patient. You can't complain if things go up and down like a yo-yo, because he's going to build the company over a number of years, not overnight.
All right. So it's for those long-termers, definitely a nibble.
Yep.
And again, Wolf, you look up in their market caps around 350.
Yeah.
What you're saying, potentially Woodlawn could be worth around.
Yeah, I think so. I think if things go well for him, and he's already reaching some numbers, he showed the potential of this, right? Talking about drilling more, flowing some cash at this, and this used to be a mine that's been going for about 20 years back in the day, and that's what he's done previously at NST. He's taken mines that have been mined, and everyone thought, it can't come up with any more. He's turned little NST into a $10 billion market cap company there. So this is what I'm hoping for. I'm hoping at least if he can double, triple my money from here, I'll be extremely happy.
Okay. 2 more stories we want to talk about. Rex, one of our other little airlines. So let's have a look at this back on the weekly. Starting to pop up, look a little bit better, Wolf. Maybe needs to do a little bit more. What did you make of the announcement?
Okay. Well, according to them, it was astonishing. One of the words they used. I've never seen a company use their own words using astonishing with their own report. But anyway, it was okay. I suppose it's astonishing in a pretty difficult market. That's the best way to take it.
That is astonishing. Someone would say our results were astonishing.
I know.
I don't think you can get a better word than astonishing.
It makes you go, oh my God, this is the best thing ever. But anyway, look, I think you've got to put it into relative context. You know, good for what it is.
I'll tell you what was astonishing. You had that massive move up yesterday before the announcement, which was astonishing that someone must have known it was going to be
an announcement coming.
And what's even more astonishing is that it had an astonishing announcement and hasn't really gone up at all today. It's actually flat. So that's astonishing.
Because astonishingly, it went up yesterday.
Okay, so anyway, but we'll watch. It's maybe tradable, but not just yet.
Yeah.
Wolf, lastly but not least, TLX.
Yeah.
Which I think, listen, we picked it. We picked that little rise the other day. I had it on. So it's had a run. I think it's definitely, you'd be looking to take profits somewhere around here.
Mm-hmm.
But again, good news, right? Good news for the business. They're getting little wins here and there.
Yeah, it's a progress report. I mean, that's what it is. If you look through it, they're talking about the prostate cancer imaging in China and South Korea, progress report, and they're talking about the new one for kidney cancer imaging in China. In China. So there you go. I mean, they're already getting revenues out of this. So potentially it could be something very, very good. Remember that checking for prostate cancer can be invasive, right? We talked about it just before the video. I know we can, do some blood tests and so on, or some other tests you can do it, but not everything's super accurate. But this seems another way of doing it, and possibly, a little bit more palatable to us males.
Except you love your prostate being checked. What are you on about?
No.
Yeah, someone told me you have it checked every week, Wolf. But...
Oh, please, Dave. No, don't go down that route. No, I don't like to check at all. In fact, if this works, and it obviously seems to because it's been approved, then I'd definitely be doing that on a regular basis, like once every year or every 2 years, whenever they specify to do so.
Okay, so it is obviously a lot easier, isn't it?
Yeah, absolutely.
Mind you, I'll tell you what, we are pathetic what the poor girls have to go through, especially
Exactly.
when they have babies. I mean, we're pretty pathetic men, aren't we?
I know.
But you can see why all the guys have been buying TLX on the news.
Yeah, exactly.
This is all.
Woo! You go, no, get me out of here.
This is all male investors. Yeah. All right. On that note, Wolf, listen, I just wanted to end with the general markets. We didn't talk about them.
Yes, no, that's right.
Nasdaq was, a little bit flat last night, and obviously the Dow they had a good move up the other day. A little bit of resistance there. You're not as bearish as I am, are you, Mr. Wolf?
No, I'm not. I've got a little bit more. I've got a glass half full approach than you've got glass half empty approach. Yes.
So it's going to be a big balance here. The interesting thing, what we did talk about was, all the news that we had yesterday about apparently in Australia, the RBA might not go now to 5%; they might go to 3%. Right?
Mm-hmm.
It's in some ways what we talked about earlier. It's the worst type of press you can possibly have, because if you start saying that, we will go to 5% because everyone will start spending again.
Yeah, it's basically the green light, doesn't it? To go, let's go buy that house again.
Yeah. So, could we? Hopefully, we don't go to 5%, but I think we are going to go to. We will go to 5%, Wolf, if the press keeps saying that we're going to stop at 3%. So could the press be quiet and just leave us alone?
I know.
I think. Well, it's all about psychology, isn't it? And everything the RBA do and the Fed when they put their announcements, it's a lot of psychology trying to hold the markets in a certain status where they want the markets to be.
Mm-hmm. Yeah. And look, just one more comment for me, Dave, and that is on just reading through the Goldman AFR article talking about the S&P 500, and they also basically saying that investors are relieved that results are holding up better than feared, which we thought that could be a problem, but thank goodness they were okayish. Of the 56% of the S&P 500 companies that have reported earnings so far, more than half have beaten analyst estimates. That's a good result, to tell you the truth.
Considering very good.
How bearish. So potentially, like I said, that's why I am a little bit more glass half full guy than a half empty. So, but I still think there's going to be some volatility ahead because we still got a lot of issues to get through.
Well, we definitely talked about that, didn't we? And the interesting thing was the the personal consumption expenditures index spiked to 6.8. So people are still spending money in America, but it's coming possibly, as you said, out of their savings.
Yeah, that's right. That's exactly right. How far, how much savings that they've got. So once the savings, I suppose, finish, what then? Then maybe there will be a collapse.
All right. And the important thing is, not to forget CPI hit 9.1% in June, the highest in 40 years.
So I think this week
you got to be cautious, Wolf. Come on. The highest CPI event in 40 years. You can't brush it. You can't brush it.
Yeah, you can't sweep it under the carpet. It's definitely the number. It's a very big number, and there's more numbers coming out this week, Dave. So that's why I'm going to say be cautious this week. Don't go gung ho. It might be a little bit volatile because we've got a number of results coming out of the US. This is economic results, so just be ready for them. There might be some wild swings on the market.
All right, thanks, Wolfie. Have a wonderful day, champion.
Don't forget us tonight. It's 7 o'clock
live.
Yes, please.
All right, thanks, Wolf. See you, mate.
Nice.
Bye-bye.